Brace yourself for the economic storm that's about to hit. Because what's coming next could be one of the most challenging financial crises in modern history. Imagine this: an 80% market crash, inflation levels like we've never seen, and commodities skyrocketing to unprecedented levels. While this sounds like a nightmare, there's a unique opportunity hidden in this chaos, one that might allow you not just to survive, but actually thrive. Now, you might be asking, how could things get this bad? Financial veteran David Hunter has over 5 decades of experience in analyzing market trends, and he's sending a serious warning. According to him, we're on the verge of a global bust, unlike anything we've ever seen. Hunter's track record speaks for itself. He's accurately predicted numerous market cycles, and now he's forecasting something much worse than the 2008 financial crisis. We're talking about a collapse that could reshape the entire financial system. Let's break this down. According to Hunter, we are in the steepest stage of a 42-year secular bull run. The S&P 500 could climb as high as $7,000 before it plummets in a dramatic market crash. We're not just talking about a mild recession here. Hunter predicts that the market could lose up to 80% of its value, and this collapse could trigger a series of bank failures around the world, all caused by excessive leverage. Here's why this is so important. Hunter points to some key economic signals that are flashing red. The Federal Reserve's interest rates are still much higher than the current inflation rate, despite some hints from Jerome Powell that we might see rate cuts soon. Hunter believes the Fed has already tightened the economy too much, setting us up for a deeper and more severe economic slowdown than most people expect. One major warning sign is the 2-year Treasury yield, which often reflects market expectations for the Fed's future policies. Right now, it's inverted compared to longer-term yields, a classic signal that a recession is on the horizon. But there's more. The global debt levels are spiraling out of control. The U.S. national debt has now surpassed $35 trillion, and when you factor in derivatives and leverage in financial markets, we're sitting on a ticking time bomb. Think about this. Hunter predicts that if inflation hits 25%, and yes, he believes it could get that high, we'll see Treasury bill rates rise to around 20%. The long bond could hit between 15% and 20%. If you consider that our debt servicing costs are already sky high, it's hard to imagine how the U.S. government could handle interest rates that high. Our debt could balloon beyond $50 trillion in the coming years, and paying even 5% interest on that is a challenge. So what happens when interest rates hit 15% or 20%? Now, if you're following so far and finding this video insightful, make sure to hit the subscribe button for more content like this. Your support helps us bring you the most important economic updates. Let's dive into the numbers that underline this grim forecast. Right now, the Federal Reserve's benchmark rate is above 5%, while inflation is hovering around 3.2%. The aggressive rate hikes have already taken their toll on interest-sensitive sectors, especially housing. Mortgage rates are near 7%, and that's caused a major slowdown in home sales. In fact, pending home sales are down 20% compared to last year. This is in line with Hunter's observations that while certain sectors may seem resilient, the broader economy hasn't fully recovered, indicating that a much larger downturn could be just around the corner. But it's not just the U.S. economy that's flashing warning signs. The global outlook isn't much better. Europe's GDP growth is barely moving, with only a 0.3% increase last quarter, and China's property market is on the verge of collapse, with several major developers teetering on the edge of default. Combine these factors with recent U.S. regional bank failures, and it's clear that the global financial system is under immense stress. What happens next? Hunter believes that the Federal Reserve and other central banks will act too late. By the time they recognize the full extent of the economic slowdown, the damage will be done. At that point, the only option they'll have is to revert to quantitative easing on a scale we've never seen before. Hunter estimates that the next round of quantitative easing could involve printing as much as $20 trillion in new money. far surpassing the $5 trillion injected during the pandemic. While this might seem like a temporary fix, it comes with long-term consequences, namely hyperinflation. Hunter predicts that by the end of this decade, we could see inflation rates reaching 25%. That's a level we haven't seen since the hyperinflation events of the early 1900s. So, where's the opportunity? Hunter sees a massive commodity boom on the horizon. Commodities like oil, gold, silver, and copper are poised for explosive growth. Decades of underinvestment in these areas have left supply constrained, and once demand starts ramping up, we could see a supercycle that drives prices to historic highs. Hunter is forecasting that oil could hit $500 per barrel, gold could surge to $20,000 per ounce, and silver might reach $500 an ounce. These aren't just random numbers, they're based on Hunter's analysis of supply-demand imbalances and inflationary pressures. If you're looking for safe havens in this storm, precious metals and energy stocks could be your best bet. Gold and silver, in particular, have a long history of being safe havens during economic turmoil. Gold, despite market volatility, has remained near $2,000 an ounce, showing its strength as an asset in uncertain times. As inflation rises, the demand for these metals will only increase, pushing prices even higher. Energy stocks, especially those tied to oil and natural gas, also present significant opportunities. With oil prices potentially hitting $500 per barrel, companies involved in exploration, drilling, and production could see their valuations soar. Hunter also points to renewable energy metals like copper, which is essential for electric vehicles and renewable energy infrastructure, as another area for explosive growth. Copper, currently priced at around $4 per pound, could soar to $20 or more as demand for green energy ramps up. In conclusion, David Hunter's forecast is clear. The world is on the brink of a financial reckoning. But for those who are prepared, this could also be a time of unprecedented opportunity. Precious metals, energy stocks, and commodities offer some of the best chances for significant returns as inflation takes hold. By positioning yourself wisely, you can not only survive the coming bust, but emerge stronger on the other side. If you found this analysis valuable, don't forget to like this video and subscribe to Economic Hero for more insights into the financial markets. Stay ahead of the curve, stay informed, and we'll see you in the next video.